Morning traders. Today we'll be looking at bullish reversal patterns. In bullish reversal patterns, we do look at either triple bottom or double bottom, which is W pattern, or inverse head and shoulder. So what is a bullish reversal? If you joined us earlier, I believe you have these notes, and if you joined us late, I'll make sure that I upload these notes in our Telegram channel. So a bullish reversal, conversely, in a head and shoulder bottom pattern, inverse head and shoulder, the completion of the right shoulder suggests a reversal from bearish to bullish. I will explain it. But basically, head and shoulder pattern is definition of a head and shoulder is the head and shoulder pattern is a classic reversal pattern in technical analysis. It signals a potential change in trend from bullish to bearish or vice versa. So in the case of vice versa, it's whereby we have a inverse head and shoulder. So let's look at both scenarios. Components. The pattern consists of three main parts. The reason as to why it's called head and shoulder. A left shoulder, which is, assume it's you. This is your left shoulder. A head, this is your head. A right shoulder, this is your right shoulder. So the ideology, remember, for people who use clean charts without indicators like the moving averages and stuff to determine the trend of a currency pair, we always determine the trend by using formation of swing highs and swing lows. Okay, so for uptrend, there's formation of consecutive swing highs and swing lows. For downtrend, there's a consecutive formation of for uptrend, there's a consecutive formation of higher highs and higher lows. For downtrend, there's a consecutive formation of lower highs and lower lows. So in a scenario whereby to identify that price trend is changing, assume from bullish to bearish, you will also notice that price will shift from formation of higher highs and higher lows to formation of lower highs and lower lows. Okay, that's the idea of whereby things like M pattern, W patterns, head and shoulder, triple tops or bottoms, inverse head and shoulder, that is where the idea of a trend reversal comes from. I'll give you an example. So, let's read components. We've read about the components. Bearish reversal in head and shoulder top pattern. Bearish reversal is whereby now price was bullish, now it's shifting to bearish. In head and shoulder top pattern, the completion of the right shoulder signals a potential trend reversal from bullish to bearish. Remember, it means price was forming higher highs and higher lows, then shifts to lower highs and lower lows. Okay, let's see just a main example. These are high, these are low. These are higher high, these are higher low. These are higher high, these are higher low. These are higher high, these are higher low. These are lower high, these are lower low. Get it? You can see now price has stopped forming consecutive higher highs and higher lows. To now, you see these are higher high, higher low, higher high, higher low, lower high, lower low. See, it has shifted from higher highs and higher lows to lower highs and lower lows. So you expect price now to continue forming lower low, lower high, lower low, lower high. Okay. So in the idea of a bullish reversal, which is an inverse head and shoulder, you can see formation of these are high, these are low. Okay, then these are lower high, these are lower low. These are lower high, these are higher low. See now? Then these are higher high. This was our low, this was a high. We formed lower low, lower high, higher low, higher high. Now price has already confirmed that it has shifted from formation of lower lows and lower highs to higher highs and higher lows. Okay, so you always look for something like a retracement rejection, then execute our trade. So I hope now you've understood the ideology behind the head and shoulder and inverse head and shoulder. Now I wanted to show you some examples of inverse head and shoulder. Remember, it's not a textbook setup always. You'll have to get used. Your eyes must get used to seeing such patterns so that you can determine a clean inverse head and shoulder. So you can always see some inverse head and shoulder which make a very straight neckline and very straight left and right shoulder. You can also see some which form like a neckline that is slanting. You can also see, you see like this one was kind of perfect. You see the neckline is at the horizontal level. There are some that are slanting, there are some that are declining. So you'll have to get used with experience. Everything you must gain experience. So another thing I wanted to tell you, every press pattern has a place where you should mostly be looking to enter or execute a trade. Okay, it has a place where you always have to put a stop loss. You don't always put stop loss, like you don't always assume I will put my stop loss at 20 pips or 30 pips. Every structure has a place where you should put the stop loss. Okay, that's one. Secondly, every structure has a place where you should put your take profit. So in the scenario of a inverse head and shoulder, the distance from the head to the neckline is the same distance you expect after a retest and rejection to the main target. Okay, so that is one thing you should understand. Now let's look at a live example in the current market that we are in. This is Nzdusd. This week we did feast on Euro NZD. That was a bearish setup. It was an M pattern which we shared in both our Telegram and WhatsApp group. We also shared it. No, we didn't share it in YouTube, but anyway, for those in our Telegram groups and WhatsApp group, I believe you fed on that. So remember, Euro NZD moves inversely proportional to Nzdusd. Okay, meaning that when Euro NZD is bullish, Nzdusd is bearish. Remember that. So let me now just show you the ideology in a live market. This is our high. This is our low. We really don't have to go back. We just need to look at the recent price action. So these are low, these are high. Here we form a lower low. Okay. We form a lower high. So once you see something like that, what does it mean? We had a low, we had a high. Then we form a lower low, we form a lower high. What does it mean? It clearly means we're in a downtrend. Okay. Then we form a lower low here. We form a lower high here. Okay. Then note that here now we form a higher low because it is like this. You can see this low is lower than this low, so it's a higher low. Okay. Then now price has come, it has breached. This is a neckline, if you remember very well. I can let me show you. Let me just show you with that using our line charts. Maybe I want to know. Wanted to use a line chart, so maybe you can see these are low, these are high, these are low, these are high, these are low, these are lower high, these are lower low, these are lower high, these are higher low now here that has been formed. You can see now price has breached this high here. So we are expecting formation of which we still don't know if it has been formed. Higher high now, because this high that will be formed here is higher than this high, so it's a higher high. Now we'll be expecting for price to retrace back to around this neckline, reject it, so that we can look for execution of long positions. Now, before I leave, I need to show you how, let's return our candlesticks pattern. I want to show you how you measure your TP. So you can see our lowest point was here, our neckline was here. That is the same distance. We expect for price to move after it has retested the neckline. Okay. Now, an issue with me, of which I know it's an issue with me, I really don't know the exact places to execute on retest. So once on retest of this Nzdusd, I'm quite familiar with the M patterns and W patterns. I know the exact points to scale into trades with the M patterns and the W patterns, like I did show you with the Euro NZD. That is actually my 8 trades. But for inverse head and shoulder and the head and shoulders, I quite have a challenge, because at times you'll find price will come, reject around here. At times you'll find price will come all the way, enter here, play around this trend line that has been formed between our head and shoulder, and bounce from here. So in case you take a trade here, remember you'll always adjust your stop loss. Okay, you will always adjust your lot size according to the area of stop loss. Now I wanted to discuss about stop loss in the scenario of an inverse head and shoulder. Once you enter a trade around the neckline, you'll have to put your stop loss below the previous low. Okay, so that is one. Second, so what I'll be looking for, assume this will be a new high. I'll be looking for either prices to react around here, or the other next place will be prices to reach this bullish order block here, which is bullish order block here, which collides with our 79% Fibonacci level. Okay, so first scenario, I'll be expecting to scale into a small position around here. If it moves, it will be fine, but then our stop loss will be around here, which is almost around 1:1. The other opportunity will be if price retraces all the way to this order block here. Now, in such a scenario, I'll be looking to enter with a larger lot size. So I'll be looking to scale into around somewhere here. My stop loss will be obviously at the same place below recent swing low, and our target will be, obviously our first target will be there, which is 1:3. For every $100 you stake, you will be expecting a reward of $300. The final target profit will be 4.7. So for every $100 you'll be expecting $470 in return. So that is one pair that I'll be looking at. I hope you've learned something actually from this analysis. Actually, if you like our videos, I think it's high time you subscribe. Also refer us to your friends, they can benefit from something. And also make sure that to check our Telegram channel. It has actually a history of almost all trades that we have ever executed since 2019, and they have been well explained by word and by photos. Okay, so it is a free Telegram channel. You can learn a lot. It's very easy to understand. Yeah, so I'll see you in the next videos. Cheers.